Hello and welcome to PRIIPs Talk by Sequoia. I'm welcoming today Bruno and Thomas.
Thank you, Susanne.
Who've joined me for a conversation. As a start, we want to present the timeline of PRIIPs as it stands now. So we had an implementation date in January 2022. That is not valid anymore. The implementation has now been moved to the 1st of July 22nd. In between that period, we have March. In March, the UK nurse regime will end. The exemption or the option to put nurse documentation on a UCITS kit. So from March, as it stands now, UK nurse would have to implement a PRIIPs kit. The question here is the old PRIIPs kit as it stands today, or maybe there's still going to be a change. On our timeline next, you see December 24. So in December 2024, there's a change to the calculation methodology that can be used. Today, as a start, there's two methods for PRIIPs calculation. The so-called new PRIIPs calculation, which is an easier, less burdensome calculation, and the full PRIIPs transaction cost. That exemption, the option to use new PRIIPs, will end December 2024. Finally, to keep things interesting, one more date, December 2026. That's when the UK UCITS kit exemption will end. So UK domiciled UCITS will be able to continue UCITS kits until December 2026. So the timeline highlights that there are at least two documents running in parallel. The UK kit and the EU PRIIP kit from next year onward. There's the possibility that within the UK, post-Brexit, some more variation will come up. But what we get to really is that UCITS kits will still be available in the UK, and the EU will have to do PRIIPs kit. So the real question is what happens for UK funds distributed into the EUA, into the EU, and the other way around. The current EU PRIIP regime applicable for UK funds may also still be adapted by the FCA, for example, adjusting the calculation methodologies further, simplifying them potentially, and that could impact also the EPT. In the UK, the FCA is already empowered to make additional changes. And one of these is that really the requirements for the description of the performance scenarios has been replaced with a brief description of information on performance and the assumptions made to produce them. So when we look at this, a lot of complexity, a lot of questions, surely, on data, on consistency. How do we deal with these discrepancies? So Bruno, if I can turn to you for a first question. What do you see as the main data challenges?
You've already touched upon one of the main ones, which is the performance scenarios, which even under normal circumstances within the EU are posing problems for managers. This is especially true for all the funds that have a recommended holding period of 5 years or less, as these funds will have to base the calculation of their performance scenarios on 10 years of data. So for young funds in particular, you can already see 10 years of data for a 2-year-old fund that is going to be problematic. And the EU has, or the European Commission has, with the new RTS, further tightened the rules that are applicable to the appropriate benchmark selection for managers, meaning you have to be very much on point with the replacement data that you include instead of actual NAV history in order to calculate those performance scenarios. I'm sure both the availability and the cost of such data are going to be pain points for the asset managers. Another area of concern is the calculation of transaction costs. You've already mentioned that as well, the full PRIIPs method versus the new PRIIPs method. We have again been granted an extension to keep using the new PRIIPs method until the end of 2024, but that doesn't change the fact that from 2025 we will have to rely on data collected under the arrival price method, and that means asset managers have to record timestamps for the orders that they transmit to their brokers. This may seem silly, or it may seem not such a challenge, but the fact is the timestamps that are currently collected are those on the execution of those trades, while the collection of the timestamps of the order transmission has been around as a requirement since the beginning of PRIIPs, but still has not been implemented by most asset managers. So I think with this, Thomas will probably jump in and add some more details on the technical side.
Yeah, thank you, Bruno, and thanks, Suzanne. Well, I mean, indeed, so transaction cost, always when we have questions on PRIIPs, it's on transaction cost. It's clearly a highly debated topic. Currently in the market, we see that a lot of parties are using the new PRIIPs method currently. Although, strictly speaking, under the current RTS, this is only allowed for new PRIIPs, recently launched PRIIPs. I mean, that's also why we call this new PRIIPs methodology. The reason why a lot of parties stick to the new PRIIPs methodology is indeed, as Bruno mentioned, because of well, the need to identify the exact timestamp of a trade, and this is pretty complex, and indeed a lot of IT providers are not capable of capturing this exact timestamp. And the second reason is obviously, let's say, the complexity to source the arrival price, and more particular, the very high cost related to this data. Now, going forward, so what we will see going forward now with the new PRIIPs RTS, I think although slippage or arrival price is confirmed by the ESAs as the recommended methodology, they did listen to the market, and they have allowed basically the possibility to opt out of the slippage or arrival price methodology under two circumstances. So the first one is indeed, as Bruno mentioned and Suzanne, a general exemption period for UCITS and alternative investment funds till the end of 2024. So these are 3 years, and 3 years, I'd say, to get ready for the introduction of slippage, to look for providers, to update your IT systems, etc. And then the second way to opt out of slippage will be for funds with a low volume of transactions, and where the actual transaction cost is not so significant compared to the total NAV of the fund. So going forward, I think we will still see new PRIIPs in the market, but now I'd say more it's now more framed in the RTS. What will change is the negative transaction cost. So that's also currently something which can appear in a KID or in an EPT. It's considered as very confusing to investors for obvious reasons, negative transaction costs. And this is also a point on which the European supervisors have listened to the market, and they have floored transaction costs at the level of explicit transaction costs, so meaning we will have no more negative transaction costs in a KID or in an EPT fund. Obviously, this is for Europe. As we mentioned, as we already discussed, what about the UK? Will they follow Europe? Then we won't have negative transaction costs either in the UK, but if they don't, then we might still have this in the UK.
Yes, and I think the UK have not followed suit there yet, even though the FCA was very vocal in terms of negative transaction cost being an error if they appeared. Right? So quite a lot of data challenges on the calculation side. Based on the fact that we have different calculation methods available, there would probably also be issues in consistency, right? On the risk and performance side, I think we see similar issues. For example, the new risk and performance calculations present a completely new methodology. So what if the UK do not go along with this?
Yeah, no, correct. So I think, I mean, it's clear that we will see several KIDs in parallel going forward. We will have, I mean, let's say next year, so fund managers will have to, for the first 6 months, update their current PRIIP. Then as from July, we will have the new PRIIP as per EU law. And then in the UK, that's still a question mark, definitely. Now on the risk and return, because you mentioned this, so obviously, I mean, some important parts of the KID. The summary risk indicator, so the risk indicator largely remains the same under the new RTS, though for the performance scenarios there are quite a lot of changes, especially for the favorable, moderate and unfavorable scenario. We do believe that it's an improvement, that the new methodology for in Europe will accommodate for the main pitfalls identified, being amplification and procyclicality. But still, indeed, we will have this discrepancy between the UK, EU, and as Bruno mentioned, so these 10 years of data. So this will come obviously at a cost. I mean, the rules are much more strict, so no more shopping around on that one.
Mm-hmm. Okay, thank you. If we look back on the PRIIPs regime in total, so there's the data requirements, especially in terms of transaction cost, which is quite a challenge. But another big demand that PRIIPs makes is that of consistency. So what does consistency mean in that context? As a minimum, it means to not have contradictory information across different disclosures. So what we've seen with the calculations is that we can't really think data without thinking consistency, at least in this context. And with the different calculation methods, where does it really take us from there is a big question, I think. Bruno, is there something that you can say about Switzerland in that context? Because, again, a third legal regime.
Yeah. I think for once, it looks as if Switzerland is not making it even more complicated. It's hard to believe, but yeah. So just to give a little bit of context, when the UCITS KID was introduced, Swiss asset managers with Luxembourg management company, of course, had to comply according to the EU timeline, but the Swiss funds didn't have the KID from the start, and when it did come, it did have a Swiss finish. And even the UCITS KID for Switzerland had to have a little bit of tweak so that it fit the requirements there. Now, with the new FIDLEG legal framework, it seems that the PRIIPs KID will be considered an alternative and equivalent, actually, to the Basis Informationsblatt, which is prescribed under FIDLEG. So the PRIIPs KID will not only be accepted for EU UCITS sold in Switzerland, but it will actually also be an option for Swiss managers to use for their Swiss fund range. And I think that is quite astonishing, considering the past. So on the Swiss funds, of course, we still have the element that they may be sold to the European Union and then are automatically considered AIFs. And as AIFs, they will use the PRIIPs KID also, or in fact already, because this has not changed since the advent of the PRIIPs regime. I don't know if there are many Swiss funds sold to retail investors in the European Union, but that is the basic premise. So Swiss managers who have both UCITS and Swiss funds will be in the lucky position to only have to produce one type of pre-contractual disclosure document, unless, of course, they get silly ideas and want to distribute also to the UK, where we've seen that there may be 1 or 2 additional formats required. Another fun twist on the timeline, actually, and I think this has not been mentioned yet. Suzanne, you said in the introduction that we are looking at the 1st of July 2022 start now for the PRIIPs KID for UCITS, according to the updated RTS. The regulator on the European level has just communicated that the SFDR RTS will be pushed back to that same date. So I think we can be very curious to see who in the industry will push for another postponement of PRIIPs, seeing that now, again, the asset managers will be faced with 2 major challenges effective on the same date.
Yeah, thanks Bruno for mentioning that, because really implementing the 2, SFDR and PRIIPs, both very data intensive, at the same time will be a challenge, or would be. So we'll see what comes our way. It's also when we consider additional disclosures necessary under our PRIIPs, like website disclosures, as well as the cross-document consistency, there, again, more challenges and linked to data. So if we take a simple example, and that's really probably a very simple one, today companies show the UCITS SRRI, for example, on their fact sheets. But what will they show in the future? SRRI? SRI? Will there be less information in order to avoid discrepancies? Will there be more information with more disclosures? It will be really interesting to see whether legal and marketing documents are produced in that way. So what's your take on this?
Indeed, it's going to be very interesting to see how this alignment happens. As you say, consistency is a very big concern across legal documents and corresponding marketing documents. So maybe we will see British fact sheets still using the SRRI and European EU fact sheets for PRIIPs already then using the SRI to be in line with each other. Time will tell, I guess. We also still have to see how the implementations happen on both sides of the channel. Generally speaking, I think risk disclosure will be highly uneven. What we have currently on the UCITS KID is a risk disclosure which is making up often half of the first page of the KID. And it provides maybe not a huge lot of detail, but it does name a few of the major risks involved in an investment in such a UCITS. And that goes alongside the synthetic risk and reward indicator, the SRI, in a sense that it is supposed to highlight risks that are not captured by that indicator. On the other hand, we have PRIIPs and the PRIIPs KID, where we rely on a summary risk indicator, as was been mentioned, not the same methodology, but kind of the same aim. But this is in combination with no additional risk disclosure on the document, meaning for the risk, the investor has to look to the prospectus, because on the PRIIPs KID, we refer for risk disclosure actively to the prospectus. So I think this is not a very good point in terms of how open the asset managers communicate to their investors. Finally, I'm also curious to see how the disclosure of past performance will play out. Thomas, I think you've mentioned before that we have this kind of in-between situation now where we have the performance scenarios on one hand, which are clearly prescribed in the PRIIPs context. But now with the updated RTS, we also have an obligation for managers to disclose past performance, but they are not allowed to do that on the PRIIPs KID. Instead, it has to be done on a separate document or on a website. And this will, funnily enough, also mean that past performance will remain as static as it currently is compared to marketing documentation. So on a fact sheet, you have your monthly updated performance, but the PRIIPs KID sticks strictly to the UCITS rules for past performance disclosure, meaning only calendar years will be disclosed off document, and the only impact of that on the PRIIPs KID itself is that we have to indicate how many years of past performance are available on that other medium. So to end with on this, we do have, in a sense, still an obligation to annually update such past performance, because obviously if you talk about calendar years, that's when such information becomes available. But we don't think that this will mean necessarily that PRIIPs KIDs will all be updated in February, as we had with the UCITS KID. So it's another question mark on how the market will deal with this funny set of rules and still keep the investor informed.
And if I can add to that, so indeed, so the past performance chart, so something new, and this will need to be published indeed separately from the KID. So this also poses, let's say, an IT challenge, because you will have to put a link on the document referring to the chart. So this will be hosted, will have to be hosted online. And then something else is on the monthly calculation. So now the return scenarios will have to be calculated on a monthly basis. So this will have to be published on a monthly basis, again online with a link in the KID. So these are indeed two, I'd say, additional IT challenges for firms to implement, making the KID, I'd say, the PRIIP KID more, let's say, an ongoing process than currently for some parties. I think it's more an annual update, as for the UCITS KID in February.
Yeah.
Absolutely.
Yeah, the regular updates are really enforced now, clearly. Where this wasn't done in the past necessarily, giving more choice to the asset manager on how often they would calculate. And the complexity has increased, right? With website disclosures, with past performance, with the PRIIPs future-based projection, let's say, and having all of this in the larger context of your overall disclosures. So website, PRIIPs KID, UCITS KID, potentially for the same product but a different market, websites, past performance, and then other marketing documents, fact sheets, or anything else. So the disclosure, which is very central to PRIIPs, really, to the intention behind PRIIPs as well, the consistent disclosure, that is really being challenged into the operational processes, I think. So quite a few challenges that we've hopefully got you to know about and to think about. Maybe, Thomas, some final thoughts on the development, where to go from now, and what is the urgent thing maybe to start with right now?
Yeah, so I think certainly, I mean, there is life after COVID. We have PRIIPs. So I think we're all very happy with that one. I think, first of all, still a lot of questions. I mean, first of all, we still have this deadline of July still to be confirmed, and then there is the UK. What about UK? Clearly, without doubt, there will be multiple documents in parallel next year, so this means a lot of work on document side. And then on calculation side, again, so new calculations to be implemented for the scenarios. We think it's an improvement, it's better, but it basically adds another layer of calculation, so more work to be performed. And then we still got this online hosting of monthly calculations and past performance charts, so they're also an IT challenge. So I think there is a lot of work. We obviously, as Sequoia Risk Council, are very happy with that one, I'd say. But I mean, yeah, very interesting. Still some questions, but we hope to get answers very soon and work together to find answers, I'd say, on those topics.
Bruno, any additional thoughts?
I have nothing to add. Honestly, it's really a big unknown still, shockingly, because everyone was hoping, especially with Commission's announcement that they would at least tick off the RTS before the summer break and then again not doing it. Now with the communication on SFDR, I think there are too many balls in the air, and I hope we can catch them all.
Very good, yes. So clearly PRIIPs is a saga that is gripping us through its many unforeseen twists and turns, and probably will continue to do so. The challenge of transaction cost calculations remains and is enhanced by the data challenge that underlies the obligation of consistency really in all areas, both on PRIIPs and across disclosures generally. These challenges are best met through a central data strategy that relies on transparent product lifecycle management, creating the basis really for an efficient, consistent and reliable disclosure across all communication channels.